Okay, so for this morning, we got myself and then Rudy Medina, co-general partners on the deal here at Nola Sky. Rudy's background, obviously, with this project is, developed it from the ground up, took it from raw dirt, has constructed it, built it over the last, 18 months? Is that about right, Rudy?
It's been over 2 years since we bought the super site, but you're on the right track.
Yeah, so now the project is complete with construction and moving towards stabilization. So now getting leased up and moving from kind of a construction type product now into a stabilized asset that's existing, producing cash flow and ready to go for the next stage.
That's correct.
Yeah. So moving into fixed rate debt, agency type debt from the construction loan, which is why we're recapitalizing with new equity and then moving it into kind of a stabilization mode from the construction.
That's correct.
Awesome. So let's go ahead and get started. I'll give you guys info about the property itself, that's location, the product type, rents, a lot of the financial stuff, give you some terms on the offering and what's being offered and how that would work out. And then at the end of it, we will have a link up to where you can go and get the documents for the pitch deck, any of the legal documents, review those, and you can make a reservation based on that. Okay. So super exciting. I mean, I don't know if you saw the new Sphere thing they have in Vegas. I've been watching that coming across.
I did. It's amazing. I went to that global conference a month ago, and Vegas has always been a vacation spot, but they went over the 8 metrics they measure municipalities in, and Vegas was number 1 and 4, and in the top 10 in all of them. And the 2 biggest ones were inward migration, population, and corporate relocation. So it's becoming a multifaceted, not just a hospitality town.
Yeah, and to kind of touch on that briefly before we get into the market metrics, but I have some friends in Vegas that have, lifelong Vegas, very well inbred in that market, do a lot of development there currently with their families who've been there decades. And some stuff that's coming forth that is very interesting. I don't know if you know who Mark Wahlberg is.
Yeah.
But he recently sold his, 40, 50, I don't know how many $1 million home in Hollywood and moved his entire family out to Vegas. And he's building a 40,000 square foot property out in Vegas right now. And with that, they are building a $3 billion studio, Hollywood studio set acreage in the middle of Summerlin. I don't know if you're familiar with this.
It's supposed to become, it's the music capital of the world, and it's also going to become a production capital of the world.
Correct.
Along with the sports and all. Yeah. So many things happening. It's just they got Formula One coming. They've signed a baseball team already. It's really dynamic.
That's exactly right. So between the baseball team that's going there, obviously they have the football that was recently there. They have basketball that's likely coming in there as well. And Mark Wahlberg is basically trying to pull Hollywood out of California because of the taxes and drop it into Las Vegas, Nevada. And they're building a $3 billion studio because he just moved there. He's building his house. All that stuff's going on. So very interesting stuff coming down the pike to where you're going to have between athletes, famous people with the residencies that are growing, all this stuff that's happening over the next 5-10 years is pretty dynamic. And like Rudy had said, it's changing from more of a hospitality industry, which we all know is there, into, hey, a very dynamic economy. And it's coming, and more is coming. So very, very interesting. So Nola Sky, brand new Class A product, right just off the strip, a few minutes, and built by Rudy and the Next Phase team with Richard and all those guys. And then he's asked us to come in with the Brennan Pohle group as we kind of move from that construction phase into the stabilization phase to recapitalize the product and move into, hey, you got a cash flowing, beautiful asset, super unique, right off the strip in Las Vegas. So I'll kind of go over the location of the property in general. So you have the strip, which kind of runs right here. You got, downtown, and then the strip area, and then it sits just up here. So not too far off, the strip area, and a great location. and brand new Class A assets. So it's townhomes. It's 44 plexes, just so you understand the dynamics of it. 44 plexes, townhome style with garages near the mass transit, just 5 minutes off the strip, near neighborhoods, luxury amenities. It does have some VRBO capabilities, full fitness facility, community room, pool, outdoor fireplaces, dog park, security. I mean, to the nines. It's a Class A product just off the strip. So this is all in the pitch deck that you'll get a chance to go through, but just kind of summarizing them here. I want to give you an aerial shot, which is a really good one, just showing off a Decatur Boulevard and Rancho Drive. Beautiful property, you know, fully constructed now, complete. They're leased up. Where are you guys at, Rudy, right now? About 35, 40%?
We're over 30%, and we're really starting to get some traction. The construction team's pulling off now. They're finishing the last couple buildings, and once the trucks and, you know, all of that day-to-day interruption is out of the way, we're really starting to see, you know, a vertical takeoff on leasing. So we'll go over the rents, you know, here briefly as to, you know, projections versus what's being achieved in the plan moving forward. But all that's happening now, which is great. So that's an aerial shot of the property. And just to kind of give you a summary of the offering that's being offered out to investors, total cost into the property is about $58 million. Projected valuation down the road right around $78 million, 70 to 78. So you got, you know, $20 million spread. Raising about $13 million of equity, of which a good chunk of that is in the deal now with the existing general partnership. Minimum investment is $75,000 to investors. Total debt on the property, the permanent debt that's being put on, is about $45 million, which is about 60% loan to value. So super low debt ratio, keeping the leverage low, fixed rate, given the environment and the inflation, everything that's going on, protect the asset. Projected returns about 20 to 25% internal rate of return on your money. Super healthy, primarily because it's a new construction product with the cost basis and where it's going to go. That's why those returns are there. 2.3 times on your equity multiple is the projection. So for $100,000 in, $230,000 out, give or take. And that's the projections. You're going to get an 8% preferred return before the profit splits of 70-30. We're going to go through that here briefly. This is all in the pitch deck. And this will give you a kind of a detailed breakdown. I know it's a little tough to see on the screen here, but a detailed breakdown of all the costs into the deal, the equity, loan to value, all of that, breaking it all down. So you'll get to see this and you can walk through that. And it'll kind of give you projections and everything. This is an executive summary that's in the pitch deck. I won't spend too much time on it here because it's obviously a lot of detail on the screen. This gives you an example investment. If you were to come in with say $100,000 investment, $100,000 investment, projected return on equity, IRR, preferred returns, profit split 70-30. So 70% is going to the limited partnerships. That would be you as an investor, 30% to the general partnership. Equity multiple projection of 2.34. And this is kind of showing you your cash flow projections over the 3 to 5 year investment. So you can go through that in the pitch deck, and then any specific questions, let us know, but it's all in there for you. And then if someone wanted to obviously put in $1 million, same concept, it's just breaking it down and running it through the timeline of projected returns for you on an example investment projections. Timelines for you. Obviously, we just finished up June into here in June and July as we're doing the investor funding and then planning to close here by the end of August on the investment. So that's the current timelines on it. All this tech, you know, is it easier to see on the boards? I can see it.
Okay, perfect.
And I got bad eyes.
Yeah, it looks like everybody else. Okay, great. So this is the sample investment on $75,000. Projected equity multiples, your internal rate of returns, return on equity, preferred return of 8%, 70-30 splits between limited partner and general partner, total equity that's being raised. And then this breaks down the capital stack. So like we'd said, about $45 million in debt, about 60% loan to value, and then about $13 million of equity, of which that's broken down between general partner and limited partner, and then showing you the splits. Investment benefits. On top of, the typical cash flow that you get out of it, which will be distributed quarterly, you get the profits from any refinance event or sale into the future. So that's the 70-30, along with the cash flow at 70-30, and a preferred return, which is kind of the baseline that would be coming out first before any splits of that 70-30. Tax shelters. There is going to be cost segregation benefits on this for accelerated depreciation to you as an investor. So you're putting money in, you're going to get a negative K1 as we do the cost segregation study on the property, and that would come out for 2023. Inflation hedge. As we all know, we're kind of watching inflation do this, but it's a great inflation hedge as rents begin to continue to increase, as supply constraints and all that stuff that's happening. Great inflation hedge against that. You can go through the projected operations. This is a 5-year projection on the operations of the property. Year 1, 2, 3, 4, 5. It's showing you right now kind of, total residential income of about 4.6 million. And then we have some other income broken down in there. So total gross scheduled income of right around 4.7 million. And you have net operating income, NOI, starting at around 3.5, but going all the way up to 4.4 as we increase all the other income, everything, and starting to stabilize that asset over the whole. So but we'd be jumping pretty quick as you kind of walk through this every year, increasing a couple $100,000 a year in that net operating income. Rudy, did you want to touch on this at all?
Well, I want to say when we released the first buildings in January, the 2 bedrooms were $18.99 and the 3 bedrooms were $23.99. And now we're at over $2 a foot. It's a really great sweet spot. We're at $2 a foot. So we're getting $20.99 for the 2s and $26.99 for the 3s. And the 3s have no incentive. And we have a waiting list for 3s. And so I don't know if you're going to touch on the build for rent, but if you don't, I will.
Yeah, we'll both go over that in just a minute when we get about the property itself. But you'll see this in the pitch deck, all the projected operations for the property. And then now we can kind of get into the property and the photos. Let me pull this up here real quick. You can see this on screen. Awesome. So the entrance, it's a sexy product. I'm not going to lie. Beautifully done, beautifully built, has a kind of a modern touch to it, but townhome design, garages, 44 plexes. So what's unique about that is this. Yes, the whole property can be sold as 160 unit apartment complex. So that's option 1. On top of that, they all individually are mapped. So you can sell a 4-plex individually. So whether that's to a military veteran person that can go up to $2 million on a VA loan and buy it, live in 1 unit and rent out 3, or to just general investors, doctors, attorneys, other people that want a turnkey asset 4-plex that's producing cash flow, institutionally managed by Cushman & Wakefield, where they can pay their little HOA fee to the community, and everything from leasing and management and everything is being handled by Cushman & Wakefield on site. They just collect a check with a turnkey Class A asset just off the strip in Las Vegas. It's a no-brainer on that side of it. So that's the other option, is to sell the 4-plexes individually with a bigger home run. So there's 2 exit options on this property. The main one going in is the 160 unit complex sell as a whole. The other option, if we choose, is to go 1 by 1. You want to touch on that, Rudy?
Yeah, the build for rent is basically for sale projects or for sale type construction rented out as a community. So you can do single family detached, or you can do what we did, which is the townhome. And the value of having the attached 2-car garage, and this is like 2 SUVs can get into each garage, is you can't even measure that in Vegas. And so when you go on apartments.com and you look at the thousands and thousands of apartments, it's totally different when you query build for rent, because there's only very popular in Phoenix. There's less than a dozen projects in Vegas that have been built with this style. So it's basically a for sale type product, townhome product that lives like a home versus a normal apartment building where you'd have your car under a canopy out in the parking field. This is direct access, just like your house, 2-car garage, washer and dryer, full amenities. So it's really a unicorn type project.
Yeah, I completely agree with that. I mean, you can see that even from the aerial, just kind of watching, this design is, he had mentioned they're all townhome style, right? So people are pulling right into their garages, into their unit, going direct access into the units. I mean, that's incredible. So to have that availability is not just, I mean, it's basically a townhome project. I mean,
It is a townhome project. And instead of 30 to 40 units density per acre, we're only at 12. So it makes the livability amazing.
Yeah, so the interior amenities, you're looking at, like you said, direct access, 2-space garages. You got the shaker cabinets, stainless steel appliances, the luxury plank on the flooring, carpeting in the bedrooms, large closets, dual vanity sinks is the primary bath, ceiling fans, convenient powder room bathrooms, and all that. And you got the washers and dryers in unit and smart home features. So as Rudy was mentioning, I mean, these are designed as a sale product, but it's a build for rent, and super unique in Las Vegas because of the townhome style product built in 4-plex pods. So from an investment standpoint, you got a complex of 160 units, but then the big home run is, hey, we could sell these individually and make everybody a gob of money. So that's the big upside on it. There's 2 options for it. What are your thoughts on that, Rudy? Do you want to talk on that from the townhome for sale product, on a 4-plex type sale?
It gives us a dual pivot. You can sell institutional, the entire project, 160 units, or sometime in the future, there hasn't been any 4-plexes built. A few were built in the 70s. Before that, it was the 50s. It makes the entry point for an investor, especially an out-of-state investor, buy 1 or 2 4-plexes. And like you said, the military buyer or somebody that wants to live in 1 unit and basically live for free. I mean, that's what the goal is, to collect enough rent in the other 3 units so that you basically live for free. So
Rudy, are we projecting, I think it's right around $1.8 to $2 million for a 4-plex. Is that about right?
Yeah, I think that's where we'll be as rates soften, in a couple of years, and we can get some 4% financing. We'll be in that range.
Yeah. But just to give you the reason why that number is so important is, with a lot of the investments that we do, we look for things called what's called BRAC realignment, base relocations and closures. And the U.S. military and the government will start putting assets around the country in different marketplaces about 10 years in advance. Las Vegas is a huge one for the military with the bases and everything out there. So you have a lot of military that have these VA capabilities that can go up to $2 million, 100% financed, get into one of these 4-plexes with essentially no money down, live in 1 unit, rent out the other 3, and we've already backed into the math. They have about $1,900 a month they're living in a 4-plex that they own the whole thing, living in 1 unit, renting 3 of them out and generating a cash flow. I mean, and living for $1,900 a month with no money down, up to $2 million. It's unbelievable. So that's a huge buyer for this. And then the backside is another for it, which could be for any outside investors, Rudy was saying, that would be coming in wanting a turnkey asset, basically taken care of with low maintenance and low repairs because it's brand new, and they can go in there and buy it to just collect checks on a 4-plex. And it's right off the strip in Vegas. And then you can do the combination, if you choose, of a little VRBO with long-term rentals. Is that about right, Rudy?
Yeah, I see this too as a big retirement relocation play. Take your money out of California or one of the other high-tax states and buy a 4-plex. And basically, your retirement will just go so much further if you can, get to as close to break even as possible and make the payment and the expenses and not have to spend anything on your own living expenses.
Yeah.
Be wonderful.
So some other photos of the interiors. Very, very cool design. And then you also see this in the pitch deck of sales comparables, up to $80 million. Some other ones on a price per door, but you're looking at, $485, $550 a door and more on a lot of the for sale product. You'll see all these sales comps in the pitch deck for you.
Those are all townhomes. Those comps were made last year, mid 400s up to 500,000 a unit. So, and we had it in escrow for we had it in escrow for 72 million, and the buyer got behind the Fed rate hikes and couldn't get the proper financing, but that was already last year. So I see this thing selling, north of 80 million in the future.
Yeah, this one sold for 97,500,000, which is 220 unit newer construction townhome style product. So you'll see all the sales comps in the pitch deck for you. And then you get into the rent comparables to kind of show you comparing some of the townhome products that are in the area with single family in general. And then the rents are being backed up because they're for real now that the property's getting leased up.
Yeah, and there's nothing new on the rent comparables that is this contemporary style. You still see that desert Mediterranean look that's been there for 40 or 50 years. So that's what makes this really unique and highly desirable.
Yeah, so like here's a nice little townhome project. You can kind of see the rents that they're getting in there. You got to look at kind of the price per square foot, like Rudy was talking about. It's north of $2 a foot right now. Is that right? Or $3?
Yeah, we just broke $2 a foot. And some of those townhomes are like broken condo deals where an investor might own a few units or one unit, but the rest is owned by, people that live actually in the unit. So there's very few competitors in this pure townhome space.
Beautiful. As we'd mentioned earlier, kind of coming where you got, I think this is right.
5 minutes from all the big job generators, right at Rancho and Decatur. I mean, those are two super streets or 8-lane streets. So they're, on the map, they show highway type markers. So, and the North Las Vegas airport's across the street. We're renting, there's a 6-month school there. We're already renting 3 or 4 units to pilots coming in to get their license and go to school.
Sure. Yeah, I'd be willing to bet you that even midterm rentals, people that are coming in for, like you said, 90 days, 6 months at a time, are probably pretty prominent within the different people coming into the market. You'll see this also on the pitch deck is just the market details from inventory, vacancy rates, all the way through the sales volume. I won't spend too much time on this, but you can kind of go through it at your own leisure on the pitch deck. I think the key components to focus on is really the management and what's going on there. So Cushman & Wakefield's currently on site, institutional management company that's been helping with the lease up, and they'll be helping post. I don't know if you want to touch on that relationship, Rudy.
Yeah, we're actually going to pivot. We're going to another institutional management called RPM Living.
Yep.
To take it from Cushman came in during the construction, but we want to get RPM Living still has 9,000 units. They're not the 900-pound gorilla, and we want to really focus on our project. And so they'll be taking over the project in the middle of July, and we're implementing, because we'll be done 100% done then, and we're implementing a new marketing plan.
Yeah. Beautiful.
That happened yesterday, so you didn't get to find out.
Well, yeah, I guess new news, right? Because we were chatting, but not until this morning. That's perfect. Sponsorship team, obviously David Lesnick, myself, and then of course Rudy Medina and the whole team at Nextbase, Richard Simis and Andrew and all those guys. So very experienced team with over $500 million in deals done in the last few years. I don't know if you want to touch on your background, Rudy, and then of course I can touch on mine.
Yeah, we do infill development in San Diego. We have over 100 million in projects in the ground. We're finishing in San Diego this year. We just broke ground on a new $50 million project in San Diego State and have a pipeline there of 200 or 300 million. We have the project in Vegas, and obviously we're with you in Texas, in San Antonio also. So very experienced. Richard's been in the business for 35, going on 40 years. Over 30 in our office. We have over 100 years experience in multifamily, both for sale and income property.
Yeah, and then your famous pass with Grant Cardone.
Yeah. I got Grant Cardone in the business. He was my first partner back in the 90s. So I came out of Marcus and Millichap, and I actually introduced him to apartments. So
yeah, when you told me that story, I was pretty blown away because it lined up with his story. I was on one of his online trainings, and he was talking about he lived across the street in La Jolla near Camino de la Costa.
yep.
Went across the street one day, met the broker who was going to be putting this home on the market on the waterfront near Wyndham Sea Beach. Had met her, walked through the house, ended up buying it with some friends for about $4.5 million, sold it for $9 million.
Yep.
That was his first big spread that he had made, first huge chunk of millions of dollars. And then he took that, of course, and started investing in apartments, of which you were a part of.
Yep. Yeah. We did a few projects together, and we made a lot of money, and it actually got me into the general partner seat.
Beautiful. So I'm going to put on the screen real quick, and then you can go on, and if you have further questions, if you want to get the pitch deck download, you can click on that. You go into the chat session right now, you'll see it popping up. You can get access to the back-end portal, download all the documents, the legal documents in there for the offering, the private placement memorandum, all the information's in there. You click on it. You can put in a reservation right now if you want to start holding your position, as we expect this to fill up quite quickly, just given the asset class, what it is. I mean, it's very conservative type property right in the heart of Vegas and brand new construction with a great exit point. So both as a build for rent, selling the whole thing, as well as individual 44 plexes. So I don't know if you want to say anything else before we kind of sign off here and maybe open it up to some Q&A. But it's a phenomenal project and a very sexy asset right in Vegas. Super excited to be part of it.
Yeah, it's one of a kind. It's a unicorn right now. So I don't have much else to say, but it's a beautiful asset. Couldn't be more happy with it.
Yeah, let me click into the chat, see if we got any questions coming in. One of them is on the projected returns, which is for this stack here. You're asking about the preferred return. Yes, it's an 8% preferred return. So the way that gets structured is that comes out to the limited partners first, and then you go to the 70-30 split that we're talking about down here. And there's no hurdle on this. What I mean by that is that's 70-30 in perpetuity. That doesn't get to a certain IRR and then split further. So it's 8% preferred return comes out first. And then upon a capital event, right, you would obviously pay the preferred return, and then you'd pay back all of the capital, like your capital account, to basically zero you out on your initial investment. And then you'd have the profit splits at a 70-30 at that point. So that's how that would break down. Yeah, and super low leverage. I mean, I know with the environment right now we're seeing, it's critical that you kind of keep that leverage low and get into fixed rate debt, given the inflationary pressures right now. And I know Rudy's dealing with that. It's a pretty wild market out there.
Yeah, we've got a bunch of loans, though, that we're in Texas. We're going Fannie Freddie. We'll go Fannie Freddie in Las Vegas. We've got one at San Diego State that's going Fannie Freddie. So it's really the only game in town, but it's, anything in the 5% range is phenomenal and allows the property to mature and cash flow and make distributions to the investors.
Correct. Yeah. Another question just came in from Akis. What is the deadline for investing since you are closing in August? We would want to start getting reservations in obviously now. funding, by the end of July here into August. And I think is the plan to close by the end of August on the deal, on the loan, Rudy?
At 75%. So we're projecting end of September, beginning of October.
Okay.
You know how it is, like on our last project, we'll be counting every lease, but 75% leased, and I think we can have 60% occupied.
Okay. So you got a little bit of time, but setting in your reservations now is a key component, so we know who's playing in. So you can close by August, September. Yeah. Perfect. Let's see if there's any other questions. And if you do, please feel free to reach out via email too. Be happy to answer them for you. So you can get all our info on the back end. And you'll see it on the pitch deck. You can find myself, Rudy, Andrew, everybody involved. Feel free to go to the websites, get some information about us and what we do. And the pitch deck and all the documents are in the portal for you. So you'll see that link here in the offer section. It should have popped up for you. So thank you so much. Nice little webinar. We're about 30 minutes in. Perfect timing. Yeah, we're very excited about it. Unless there's any other questions, we'll go ahead and sign off now. And then please click on the links to get reserved. And we'll talk to you soon. Take care.